What's going on, everybody? Michael Silva here. Did you miss out on today's monster rally getting 2 standard deviation move outside of that daily expected move? Well, in today's video, if you missed it, we're going to be plotting out a potential path for new opportunity in the SPY and the Qs. We're also going to talk about various commodities. We're going to be updating the daily expected moves and so forth on today's Stock Market Brief show. If you're new here, well, this show's Monday through Friday. We use technical analysis, intermarket analysis to get a good idea as to where the market might be headed. So if you haven't done so already, subscribe and like the channel. Let's go ahead and get into the market. Now, we talked about pre-election seasonality yesterday, and we said that, hey, there's typically a pivot turning point. And, well, it played out, right? This was yesterday, or today, I should say, sorry, the 18th trading day, going into the 19th trading day, and we saw the markets rip up, and you typically see a month-end month-end markup and quarter-end markup towards the end of the year. If you look at like the NASDAQ pre-election, you can typically see this go into middle of July, but then you have months of just chop back and forth. Today, we did have a big day looking at the S&P 500 heat map. Pretty much green across the board, some red names there in diagnostics and research and healthcare. Okay, but the big mega cap names did fare well. Google was one of the very, very few stocks very slightly down on the day, rather unchanged. Now, if we take a look at the SPY, it did get outside of that daily expected move, right? 68% of the time, it finishes within there. Well, we blew through that, and sometimes when it comes back down, these can act as levels of support, but it didn't even do that. It was just a solid move to the upside, making that 2 standard deviation. Now, we will be updating these levels in today's stock market brief and kind of plotting out a potential path. Let me fix this right here, right quick. Here we go, like that. 1, 2, 3, 4, check, check. Okay, here we go. Okay, the Q is also 2 standard deviation move there. Outside of the daily expected move, we recouped that month-to-date anchored VWAP. So just a big moves overall, hardly even digested. But like I said, we will be plotting out a path in today's video of kind of what I would be looking for to potentially play long. If you did miss this move, and if you didn't, congratulations, it was a big move to the upside. Let's take a look at the 10-year, 2-year yield curve. This went deeper into inversion, 97 basis points, so getting deeper there. And we talked about how the correlation where we said this could typically goes down. Well, the market has been kind of going up on that, right? Market goes up, yield curve down, market up, yield curve down, market up. But we said, hey, watch out for a potential uninversion at some point, because when we see it start move up, the market has pulled back at those times. So an interesting correlation to continue to watch. If you take a look at the 10-year, still coiling up here like crazy. Man, if this starts breaking out, we're going to go back to 4%, potentially 4.3% on the 10-year. We will see. I mean, it looks like a bullish structure here. We do have this kind of curling itself over, so perhaps it's a little bit of fake out when we go back down. Needless to say, this goes down, bonds go up, this goes up, bonds go down. Speaking of bonds, take a look at TLT. We'll use that as the proxy. It's just going sideways here too, right? So it's kind of, we have a low, we have a higher low, we have a higher low, so it's potentially coiling up here. It's contracting, where if we get an explosive move, it can bring us right back up to that upper end of that channel. But we got to be just aware that it's also potentially, could break down, right? So we have expansion, now it's contracting. Well, if it breaks down, well, we might come test the lower end of this channel, which would tell us that the 10-year yield could potentially head higher, and that very well could put pressure on tech growth, heavy growth stock names, because obviously money gets more expensive as yields go up, or rates go up. Now, if we take a look at the dollar backed down a little bit today. That did help out the S&P 500. Didn't help out commodities, though. You can take a look at gold. Gold took a little bit of hit, down 0.5%. Oil was down 2.41%, so that was a pretty big hit. Still, this, to me, is sniffing out recession. This thing looks like pretty ugly, so the bulls got to step in quick, or this thing looks like it can just continue to get destroyed, which would not be good for energy stocks. And, there's a lot of energy names, obviously, within the small caps, the Russell. So if this turns around, we'd potentially start looking at the IWM a little bit closer, because we could see some really good opportunities there. Take a look at copper up here. Copper also backed off today, down about 0.5% there as well. If we take a look at the updated summation index, now we are still 2 days as a potential change in trend. So we'll continue to monitor this as price now is, moved up slightly, but it's still overall just going sideways there in the short term. The summation index for the New York Stock Exchange did tick up here. And we do not have a parabolic SAR that ticked over it. So if this starts turning back, this will start clicking over, and that could identify a potential change in trend there in that market. If we take a look at the Pring Bottom Fisher, the Pring Bottom Fisher I like to use for finding potential bottoms in the market. The last time we talked about it was when it did get down below this -30 reading of both the Pring Bottom Fisher and the 10-period moving average. And when it turns back up, it could find potential bottoms. It found that there. It found that here in the pandemic bottom, and it also got us pretty good here in the 2019, late 2018, where we had that, I think we call that the Christmas Eve massacre, and we started coming out through there. So I just wanted to call out that it is potentially starting to curl here. I don't like to necessarily use this as a topping indicator, but, it's still worth noting potentially at times because, boom, it fell down a little bit. And then if it doesn't get too extended to the downside, I like to see it -30, but same with right here, right? It caught a little bit of a bounce, but moved down. But I just wanted to call out that, hey, if it is potentially curling over, it could be something to watch. If we take a look at the S&P 500, we reclaimed that month-to-date anchored VWAP, and that was that important level that we talked about. We mentioned also, right, remember back with the quarter-to-date anchored VWAP, once we recapture it, bulls are back in control. So where would the bears be back in control? Well, they'd be back below the month-to-date. Month-to-date's almost over, so we'll keep an eye on this moving forward into next month, but we will be getting a new month-to-date anchored VWAP when that month starts. So is this just a pullback, a slight little tiny pullback, and we're going to go right back and try to retest the all-time all-time high for 2023. Not all-time high forever, but the 2023 all-time high. Well, let's start plotting out a potential path. Okay, so first and foremost, let's talk about the white lines on the screen. The white lines on the screen, those represent the daily expected move. And the daily expected move, right, 68% of the time, if you think about it as a bell curve, boom, 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 68% of the time, it closes within these ranges. The orange lines on the screen are the weekly expected move. And remember, if you think about this as a bell curve, 68% of the time, it closes within there. Now today, right, we had a 2 sigma move, and that is very plausible and possible. We've saw it, right? It happens on occasion. Okay, so that's that. If the lower comes down, right, 433.85, that would probably retrace just about half of this move. Boom. And that would pull into a week-to-date anchored VWAP. It would pull right around this anchored VWAP from the start of today, which tomorrow that would be considered a 2-day anchored VWAP. And it is inclining nicely there. The week-to-date, as we reclaim this level, started turning up here. So now we have a 2-day anchored VWAP starting to incline. We have a week-to-date anchored VWAP starting to incline, and it's all in confluence here, down right around that 434 level, that daily expected move. Also to note, the 5-day moving average. We're back above the 5-day moving average. So the longer we trade up above it, this is going to start to what? It's going to start to go to a neutral trend. And if we start pulling back, we can start to see this turn up. So if you've been watching these videos, we've said that that is what you look for. So in the very short term, bulls are back in control, but we're still wanting this to start to curl over. So as we saw a strong move into the anchored VWAP here from this swing high, the high, I believe this is the June high, what we want to see is a consolidation, a potential flag pattern, a potential pullback, and you want to see these areas here hold. So now that doesn't mean price is going to come down here, but if it does, watch to see how price works itself out in this area. Not only is it this anchored VWAP, and the 5-day moving average and the daily expected move, right? But you also have the previous support, resistance, and it's right within this area too. So that could potentially offer up a very good opportunity if we get the pullback. So if we get the pullback, wait and see how price responds, and then you could pick back up through creating a U-turn type trade. So that's what I'd be looking for. Now, if we don't get that and we get some monster gap up, not necessarily the thing that you'd want to be chasing into. What you'd want to wait for at that point is to see if this anchored VWAP starts curling over and we start to hold this as a level of support, and you can play it back up through. We had that negative divergence very slightly there on the RSI. You have a high and a higher high, and you have a high and a lower high, and started to pull back there a little bit. So what you would like to see is a digestion of the move, consolidate, potential flag, and then break back through this anchored VWAP. That would be ideal from either, those would be the ideal plays if it came down here tomorrow. if it started up here tomorrow, or even if it opened up right around that center point going into tomorrow. So that's what I'd be looking for. Let's look at the NASDAQ 100 and do the same thing. Month to date, anchored VWAP. We did reclaim that level. Okay, so is this just a pullback, flagging, potentially try to come hit this prior swing high? We talked about that as we know it would be bullish if all we did was just consolidate sideways there. Well, we'll see if that is the case. Now, today's big up move, right, was on decelerating volume, and that was on the NASDAQ and also the S&P 500. So it's something to just note that this end of month, end of quarter markup stuff can be a little funky going into the new quarter, where we're going to have what? New earnings, right? The financials are going to be the first to report, I believe it is. So there can always be a lot of like stuff that comes after that. So we got to consistently stay on top of this stuff. If we take a look at the 15-minute time frame, we did come into the June high anchored VWAP right up into here, and we closed right below. We had that negative divergence there. We're back above the 5-day moving average. We're above today's daily VWAP. That's starting to turn up quite a bit. We didn't even back test it, so this could be one to watch. And then the week to date, obviously starting to curl itself back up. You can see we came in, right? We started the day here, rejected. We kind of popped up through it a little bit. I think that pop was on some data, okay? And then it came right back down. We just went where? Right where the month to date anchored VWAP was. And as soon as we cleared that level, boom, it was off to the races. So what do? Well, we'll take a look at the daily expected moves going into tomorrow. 360.73 to the downside, 366.93 to the upside. What I would like to see is price to obviously come down, flag. Maybe it doesn't need to be that steep. Maybe it can just go like this, right? And then flag out sideways for a little bit, and then potentially break through that flag to head up to the upper, either weekly or daily expected move. So just like the SPY, I'd be looking for a pullback into these anchored VWAPs, but I'd want to see those hold as a level of support. If we do not get a deep pullback and it starts up at around this area, well, give it time to see how price wants to digest within the first 15 to 30 minutes of the day, right? You get a lot of whipsaws early on, okay? And then see if it consolidates sideways. If it just starts up here and then comes back down, you don't want to get stuck by chasing and then a digestive move like that, right? Because then you'd be like, oh, now I need price to come back up to come up here. Okay, so you want to just be patient. Remember, the 5-day moving average, it's still declining here at this given time, but the longer we stay up above it, it's going to neutralize, okay? Boom. And then it could potentially hold now into a level of support with this to start to eventually turn back up. So overall, decent look as it stands, but we need to be patient, because if you just chase a move into main levels, well, you can get obviously stuck in those positions, or, you know, it can never come back, right? You might be stuck waiting, but it might just go deeper and deeper down. And that's always a possibility, as we've seen. Big, strong move, faded down, strong move, faded down, strong move, faded down. Okay, so is this a strong move or we're gonna get faded down? Well, as it stands, we're above a 5-day moving average, and the longer we're there, it's going to start to incline, and that's what you'd want to see if you are bullish. That's all I got for you on today's episode, everybody. See you later.